Alright, ladies and gentlemen, in today's video we're going to be going over how to know which PD arrays will work, which ones will get disrespected, which ones will get respected, and that's pretty much it for today's video. So first things first, we're going to have to be fully honest as to how to find which PD arrays will work. You're going to have to do a top-down approach. Top-down approach is probably by far one of the most important things whenever you're trying to find which PD arrays will work, because you're doing a top-down analysis. You're following the order flow on the higher time frame. You're just breaking it down lower and lower, and it gets very easy to understand which draw on liquidity which draw on liquidity you're trying to aim for, internal versus external, all these important things. You just combine them in there and you just shrink the analysis even more and more to the point where you're able to find which PD arrays will work. Another one would be Power 3, understanding the time element hour aspect as to how the candle is going to be forming. It could be a Power 3 on the monthly, Power 3 on the weekly, and this is by far one of the most important concepts you can use to understand how and which PD arrays will probably most likely get respected. The next one is your dealing range if you are in a premium / a discount. Another thing is fundamentals. COT data can help you, or it can be seasonality. Seasonality is a big part. It can show you the roadmap as to what you can most likely expect, and that is pretty much it for this. So we're going to go do a top-down approach. So if we go to the weekly chart, we can see on gold here where is our most obvious draw on liquidity. Pretty much is going to be this low right here that has pretty much not been tagged yet. So we're just going to mark that out real quick. And of course, you're going to always want to look at price from the lens of the most recent candles. Of course, you're going to want to focus look a little bit left. You don't want to look all the way left fully, just fully looking left. You want to focus on what price is giving you and what context and clues it can give you. So another thing you can see here, we have an order block. You can see we respected the mean threshold of it. So you can see here, we're going to fix that price level up real quick. We're going to mark out the mean threshold of this order block. All right, as you see, we have that mean threshold of the order block. These are my two drawn liquidities. It's very simple and sweet. Even if we go to the monthly chart, you can just see on the monthly we have a buy side imbalance, sell side inefficiency. And if we go to the consequent encroachment of that, you can see we never came close near it until this draw on liquidity. So that can be even more context to frame from doing a top-down approach. Maybe we can open up the monthly candle, drop down, and eventually we rally higher. That's one of the factors you can consider using this monthly buy side imbalance, what sell side liquidity on the weekly chart. Very simple and sweet. And then if we drop down to the daily chart, we can go and put this over here. You can just see pretty much here what do you have on the daily chart. If you go look a little bit left, you can see pretty much we have multiple down close candles, and that has created a bunch of fair value gaps in the form of a sell side imbalance, buy side inefficiency. We're going to mark out the most latest one, and eventually of course you always want to use the first fair value gap that created that downward spiral. So this one is probably the objective with this buy side liquidity, but if we can't even run past this one, then of course we're not going to get up here. If we do run past that one, this one right here, pretty much we run past it, we close above it, and then eventually we can use that as an inversion to push against this one, and then these up here, of course. So whenever you have this type of movement, you're going to want to be very cautious. And of course, another thing is what your dealing range, pretty much your dealing range. Where are you inside of the dealing range from your most recent high to the most recent low? You can see this is pretty much a premium up here. Anything above here, we're going to be looking for shorts. Anything below in a discount, of course, we can continue lower if we want to take out this liquidity. So you have to be very cautious of that. But if we were to rally up, of course, I'll be looking to have that lower movement from anywhere up here. Of course, using that top-down approach is very important. Power 3 on the weekly chart too. How this candle opens up next week is very important. The open, high, low, and close. Even on the monthly chart, we just started up this month. You're going to be watching the monthly, how this monthly candle is forming. If we're going to create the low of week, the first week or the second week, and then rally up, it's really just all these important factors they have to put into consideration whenever you're trying to find your PD arrays that will work. Again, here we're going to mark out the consequent encroachment just for more precision, I should say. But again, you're always going to want to have to consider all the other PD arrays. But right now, I'm just going to focus on what price is giving me right now. And of course, we can mark out every other fair value gap. But if this one can't even get ran through, what makes me think that this one is going to get most likely hit? We're going to have to see what price is giving us at the current time. That's another thing you're going to want to put into consideration is the time aspect. What the economic calendar is telling you. What certain news factors and certain days have this type of news. So that's something you want to consider. So on the 4-hour chart, you can see here we have been ranging inside of the mean threshold of that weekly order block, pretty much. And of course, if we wanted to dig deeper, we would have probably continued lower after this low was hit. But that just goes to show that dollar is showing weakness while gold is showing strength. Again, there isn't much here that you can just implement. Some time frames you won't have much analysis to go off of. Of course, you can use this little buy side imbalance or this little breaker in here. But at the end of the day, you know, if we can't even push above the consequent encroachment of this and close on the daily above it, what makes you think these will get respected? That's something to consider. You know, the higher time frame approach, that's something very important. But we're gonna mark these out, you know, just to show. All right, so we have that pretty much marked out. We have the most up close candle basically up here, the breaker, and then eventually we have that buy side imbalance. So this is pretty much a unicorn setup that has formed. So I wouldn't mind if price came back down here and then we rallied higher to the consequent encroachment, and then we probably took out some form of buy side liquidity pretty much that's being up here. I guess these highs up here, even this high up here would be a good area to target on buy side. Pretty much this high up here, that would be a good internal high to mark out. But of course I would want to see more of a premium of the range be hit. So draw this out to right here. You know, of course that is inside of a premium, so that would be the most ideal target right now for me. If we are to rally up and continue up, that would be my buy side objective. Even if we have this big sell side imbalance, we can probably most likely have some sort of resistance, then eventually make it an inverse after we break above it and retest to use it as an inverse to push price higher above this buy side. If we don't take out the buy side as soon as we run through that sell side imbalance, this is all speculative. Of course this cannot happen if the market doesn't want it to happen, so this is all speculation in my opinion. Again, the hourly chart, you can see we just have been pretty much consolidating or range bound. We've been inside of this high, this low. We were range bound, and we broke out of it, and then we rallied higher. We broke above both the high and the low. So that just goes to show, you know, what type of market environment we were in before. That is also something you have to put into consideration, is the market environment you're in. If you're in a range bound, you're consolidated, or in a trending market environment, you know, these are all important factors they have to view price and consider. If we draw down to the 15-minute time frame, pretty much just see the market. Again, I always talked about this premium arrays, and this kind of arrays can become inverse. So that is just another thing you have to always consider. You know, a sell side imbalance here can become inverse. Discounted of this wick can probably become inverse. You can use it. The premium of this wick can get ran through and can use it as what to push price higher. This buy side or this negative order block can be used as an inverse to push price higher. A lot of the PD arrays can become inverse. A rejection block, old high, old low, can become inverse. So those are also considerations and factors you have to consider. But majority of the time, you know, you're gonna want to frame that bias and narrative from a top-down approach. So you can't just enter on a 15-minute time frame expecting each PD array to become inverse or respected. You know, you have to see where the drawn liquidity on those higher time frames are. That's kind of why it's the number one thing, you know, the top-down approach. And then the power 3, of course, using the power 3, seeing how that higher time frame candle is going to form is very important. Then the dealing range, of course, your premium and discount, seeing which areas are ideal for sells and buys. And then your fundamental analysis, your seasonality, your roadmap, seeing which months are likely to do what. And then your CO2 data, basically seeing where the commercial and then large hedge fund money is basically moving. If we're those are very important aspects of fundamentals, in my opinion, that can help you see what price is doing and what most likely you can expect. But of course, you don't want to be fully dependent on that. You want to have some form of technical analysis. That's kind of why we're doing this. But again, on the 5-minute, you can just see here on the 5-minute, price has been more range bound, and we still have yet to be breaking out of these two areas, this high and then this low. So until, you know, eventually we retest, we rally higher, that's kind of something I would most likely expect. But, you know, we can dig deeper if you want to, because we have a lot more room to be able to dig deeper, because we have that buy side imbalance, and then of course that breaker, the mean threshold, that breaker can be most likely retested and then eventually close inside of the buy side imbalance. These are factors you have to keep into consideration. Go down to the 1 minute, you can just see perfectly price has been dropping lower after hitting that daily sell side imbalance. Of course, it is showing signs of respecting it, so that is another thing you have to consider, that this buy side imbalance and this breaker can most likely be pierced right through and then eventually retested as inversed. So these are just PD arrays you have to fluctuate and just really frame a narrative and bias upon them. Of course, the downtrend movement for the order flow on the weekly and the daily, you just go to show that we're moving lower. But I wouldn't mind a retracement to a premium again, and then eventually dropping lower, or eventually, you know, continuing to rally up. You know, it's just, these are the factors you have to consider into trading. You know, we're not going to hold a trade for that long, of course, but, you know, intraday movement, of course, frames, you know, your context behind those bigger moves. So that is pretty much it, ladies and gentlemen, how I see and know which PD arrays will work. These are all the factors that you have to consider. So if you guys enjoyed today's video, make sure you guys drop a like and subscribe for more. Until then, I'll make another video probably next week. So I'll catch you later.